Allow me to introduce myself. Who knows what dastardly crime you might perpetrate?
I've been invited by Bloomberg to go to an event where they discuss the Brexit problems or the issues that we might have with the Brexit, where basically England's going to vote whether or not to stay in the European Union. It's a big deal for financial markets as well. So I'm going to go mingle, have some breakfast, and let you guys know how we might be able to trade all this. Mars, so now I'm late, so I gotta run. There it is. That looks a little better. Good morning. I just got back to my office from that conference. I thought that was a really, really good conference. Thank you, Bloomberg, for putting that on. Basically, my takeaway, we'll walk through it more closely here in the charts in just a second, but my big takeaway is that consensus is that essentially the Brexit is not going to happen. In other words, the UK stays in the European Union in that sense. Now, I will tell you there's various financial scenarios people are laying out. At the end of the day, the only market that's pricing any risk into all of this is the currency market. So I think that may be where we have to play this a little bit. We can play this through ETFs. So let's have a look and go through the big takeaways that I've had from this conference and how we might be able to trade a Brexit or a lack thereof. Okay, so let's keep this quick and simple. We'll look at my 4 takeaway points and then at some charts. Number 1, analyst consensus right now is that basically there's no Brexit. In other words, that the UK remains in the European Union. On the other hand, point number 2, the polls are saying that the chances are about 50-50, and that's what makes all this quite scary and very tricky. Thirdly, and as a result, I think anything can happen. Some of the smartest guys I spoke with in that room this morning, they basically said, listen, anything could happen. We could see a big blowout in all asset classes, equities, rates, currencies. If there's a Brexit, if there's no Brexit, maybe we could see a muted reaction, or we could see a muted reaction in either case, or a big blowout in either case. We just don't know. What we do know right now that the only market pricing any real risk in all this is the currency market. So pound sterling, 2-week options from now until that June 23rd vote. There's a lot of implied volatility in those options. All the rest of the markets are not really pricing anything. And so I actually think the best trade to do here might be to do nothing until we see a reaction or a lack thereof after that vote on June 23rd, and then see if something happens. Let's look at a couple charts here to give you guys a little bit of perspective of what that might look like. So first of all, GBP versus the US dollar. You can see long-term support going back into the 90s in the high 130s. Call it 137, 138-ish. If we were to see a break below there, a sustainable break below, that would be quite significant. On the other hand, more near term, you can see we continue to make a series of lower highs versus those highs in 2014. So from that perspective, that should favor a continuation lower. But again, I think taking that chance ahead of this vote is quite silly. Let's see what happens after the vote. If sterling really wants to sell off this dramatically and it starts breaking below 137 on, say, a weekly closing basis, that would be quite a big thing to watch. If you are a more US dollar centric investor, the ETF you want to look at to play this would be the FXB. FXB. Putting in the ticker here, you can see it looks quite similar as it should. The other chart number 2, I want to look at the more. Maybe we see a bigger reaction there. I'm not entirely sure. Some of the currency guys I spoke with this morning, they had really no opinion on this, but that might be interesting to watch where there's a bigger reaction. But let's quickly look at this chart if I can get it, and you can see essentially what we have here: euro versus sterling. So if the sterling were to sell off after the announcement, whether a Brexit or not, and if it breaks above, let's call it 0.8 on a weekly closing basis, i.e. pound getting weaker versus the dollar versus the euro rallying, that would be from a technical perspective would be very, very bullish for the euro, i.e. bearish for the sterling. So watch that level as well. That's chart number 2. Chart number 3, very simply, and this is a trade idea I offered on Thursday. You can click here to watch that video on Thursday where I said, listen, I think it's time to buy some VIX. We did so in the clubhouse. The VIX might manage to spike well above 15, 16, now closed at 17. this week, and I think the VIX actually could continue to rise further, particularly if there is a Brexit. If there's no Brexit, I still think there's plenty of other risks out there in the market that could keep the VIX around this level and maybe higher. So either way, taking a bit of a position here in the VIX, and this I think as an exception could be done before that vote. So that's it, guys. I hope this makes sense. Please make sure you subscribe to my Instagram channel, instagram.com/steadytrader. Also, please give us likes, subscribe to the channel, and I'll see you in the next video.